Hi everyone and welcome to our market update for December 2016. I'm Aaron Upcroft. I'm here with Rob Gilmour. Tell us a bit about the decision today, Rob.
Hi Aaron. Well, without too much surprise, the Reserve Bank decided to leave rates at 1.5%. But that said, rates are going up.
Yeah, I presume there's a fair bit to talk about this month. So give us a little bit of an understanding of where you think we sit, obviously leading into the end of the year as well.
Yeah, well, we've been saying for some time that this is probably the bottom of the rate cycle. And what we saw in December with the election of Donald Trump is really an acceleration of the trend of rising bond yields around the world. And that's going to translate through to the cost of funding for banks, and that means interest rates for consumers will be going up. The other thing that's been driving commodity prices and putting pressure on rates is massive stimulus coming in from China. It's $4.5 trillion has been pumped into the Chinese economy to push things on. So we're seeing commodity prices quite high. That's good for Australia. We've got a higher Australian dollar. But really the big news at the moment is the global rise in bond yields, and that has implications for asset markets and consumers everywhere.
Yeah, sure. And I'm seeing a lot of this movement as well. So the long-term rates are starting to shift. They're all starting to move. Mm-hmm. They're all happening. They're all moving very quickly as well. So, and this always happens every time that we do that we hit this end of the rate cycle. That when the movements happen, they happen very swiftly. So
where are you seeing the movements? Are you seeing it in variable or fixed?
A bit of both. Mainly fixed. Mainly the longer-term fixed rates and the 5-year rates. But there was one lender this week that's decided to lift by 8 points on the variable rate. So I suspect there's going to be a lot of off-market movements by all the lenders at the moment. So yeah, it's mainly the 5 years that are shifting. The 2 and 3 year fixed rates are still very attractive for both owner-occupied and investment. But it's all shifting around right now.
Yeah. Look, it's certainly a conversation I've been having with clients that have investment loans to lock in those fixed rates, and it's still possible to get something starting with a 3.
It is not really in the 5-year rates, but on 4 years it's still probably possible. Yeah. The 3s are definitely possible, and the 2s are definitely possible as well.
Yeah. So that, I mean, it makes a lot of sense to take advantage of those rates while they're available. Rates may stay lower for longer. They're not going to go up in a hurry and too quickly. Put it this way, the world can't afford it. People are very indebted. So, but the great deals on fixed rates are probably past us. I think the other thing to be mindful of is certain asset prices that are sensitive to interest rates, and that means the property market. I mean, I think we are right now probably seeing the peak of the property market, because we all know that when rates go up, people can't afford to borrow as much, and there's not much going into the market.
Absolutely.
And we're also seeing a correction in the stock market for all those stocks that are sensitive to interest rates, like the listed property sector, like infrastructure. They've all come down 10, sometimes 20%, some of those stock valuations. So it does cause repercussions all across asset markets as well.
Yeah, sure. And does that mean volatility in general across all investment classes that you're looking at, or what's the outlook for the next sort of leading up to Christmas? We've only got a few weeks. Is there much to do? What are your thoughts?
Look, I think the big news is the real shift in policy in the US. The morning that news broke of Donald Trump being elected president, it really provided a bit of a circuit breaker in terms of the direction of economic policy. We're going to start to see fiscal stimulus in the United States, and that's certainly going to be positive for the US economy, and will have flow-on effects in Australia. And I did do a video on that the morning that Trump was elected, and we're going to include that with this update, because really that sort of has changed the paradigm somewhat. There's animal spirits out there in asset markets and consumers again, which is going to spur growth, and that's the big news that's come out recently, and that'll probably flow on. That said, there's always going to be volatility when you get someone like Donald Trump who's sitting in the Oval Office, I'm sure.
Sure. Well, look, that's our market update for December 2016 and for the year. We'll see you again in February 2017.